and welcome to the Global View. On this Thursday, I'm Andrew Gagan. Good to have you with us here at ausbiz. Well, let's take a look at what happened overnight. Global equity markets turning sharply negative, with investors seeking to take profits at month's end. US Treasury yields rose, putting downward pressure on stocks amid concerns about interest rates remaining at elevated levels. And that comes ahead of the personal consumption expenditure data, the Fed's preferred inflation gauge, which is delivered at the end of the week. Now on Wall Street, the Dow fell to its lowest level in a month, while the rate-sensitive utilities were the biggest drag on the S&P 500. Airline stocks fell, led by American Airlines, with its stock plummeting after the company cut its second quarter profit forecast on weaker pricing power. Shares of cloud service provider Salesforce fell heavily and extended trade after forecasting second quarter revenue up to $9.25 billion, which was below estimates. Shares in Marathon Oil rose after ConocoPhillips said it would buy the company in an all-stock deal for just over $15 billion market value. Conoco shares fell on the news. And Dick's Sporting Goods shares jumped higher after lifting forecasts for annual sales and profit, while Abercrombie & Fitch rose as it raised its annual sales growth forecast. And shares of pet products retailer Chewy surged as it beat first quarter sales estimates, while it also announced a share buyback of up to $500 million. Well, US economic activity continued to expand from early April through to mid-May. That's according to the US Federal Reserve's Beige Book, but it found firms had grown more pessimistic about the future, with consumers pushing back against price rises despite inflation increasing at a modest pace. US Treasury yields have risen to four-week peaks across the board after another weak debt auction and cautious comments from Fed Reserve officials on the timing of rate cuts. The 10-year rising to 4.61% and the 2-year at 4.97%. The US dollar, it strengthened, boosted by higher US bond yields, while the Japanese yen has fallen to a four-week low, and the Aussie is trading at 66.1 US cents. All right, so let's get across what is moving markets, and to do that, we are joined by Ira Epstein from Linn Associates. Ira, very good to catch up with you as usual. So what did you make of that equity sell-off? What's at play at the moment, do you think?
Well, May is one of those months where it's not uncommon. You hear the saying, sell May, go away. I used to interview on television Mr. Hirsch, who wrote the book, The Stock Trader's Almanac, when I had my TV shows. And to make a long story short, it's a phenomena that doesn't work all the time, but it works because a lot of people go wait for this summertime, the attention turns. We've already had the strong earnings out of the first quarter or whatever you're going to have out of that. What this market's done is it's defied logic and just continuing since January to continue to go up, including this month, set record highs in many cases. And suddenly the market is just nosedove, with the exception of the NASDAQ because of NVIDIA. Most of the indices have gone down. One of the things that set it off yesterday was poor performance in the 2- and 5-year Treasury auctions. We're up now, as you just showed, near 5% in the 2-year. And at that number, you're sort of spooking the market again. But I'm going to repeat, I just question. There's a point where you're up high enough and you can't keep adding for no reason other than you feel good about the market. The market is too strong for the Fed to cut rates, in my opinion. I don't see it, and I listen and read to all the interviews that the Fed members come out with. I don't see anybody saying we got to go right now, not one. Therefore, the question is what will make them go? And to a person, lady, man, they're all saying they want to see the data, and the data just hasn't come in that week. It's wobbled. We're going to get another set next Friday, a week from this Friday, of the jobs report. We'll see what that does. And the Fed's favorite gauge, as you said at the intro, is coming out on Friday, and they are looking for the PCE to slip back about a tenth. But let's understand what that means. It's still a positive, which means inflation is still climbing, not declining. And they need a decline, not that it slows the rate of its acceleration. I hope everybody understands that. And that's what weighs on these markets. Last, we get into the situation where the European Central Bank is widely expected to cut interest rates next week. It's a flip right now what the Bank of Canada will do. Then we have the UK, which out of nowhere they call the snap election. I've tried to understand, and I've been reading about why the prime minister called it, and I think I get it. He's got his best shot at lower inflation right now, and that's what he wants to use because the economists are predicting an uptick in inflation right after August. And he figured I might as well get this thing done. If I'm going to be able to keep in power, this is where I'm going to go. And I read that today, which was interesting. So you put it all together, it's an interesting time. My favorite commodity, copper, is giving me the pullback I was hoping it would. I'm very interested in COPX, which is the ETF in it. Might be a better way to play than the futures, but I think copper's a runaway market by the end of the year. I think it'll keep building on itself.
Interesting. Ira. Well, with a focus on the US economy, of course, we did get that read from the Beige Book. What did you make of that? Economic activity continue to expand, which underlies the point you just made there. But it did make the point there that many firms now a little more pessimistic about what they're seeing ahead.
Well, we knew that there was price point pressure when you and I talked about it 2 weeks ago, and McDonald's was coming out with their special value meals, then Wendy's was following, then Burger King was following. So we're seeing that. We're seeing that when you look at a company like Walmart, things are flying out the door, and the same with Costco. But then you step over to Target's in the United States, which was more of a upper priced, lower priced store. Does that make sense? I hope it does to people. But that's basically what it was. And they're lowering the price on 5,000 items. Literally right now, they're going through their items. I've been in the store recently and I can see it happening. So yes, and so that's what the Beige Book said. Beige Book is also pointing out that labor's eased up a little bit. You're not hearing that people aren't getting hired. That's the important thing. We saw today the Richmond Fed numbers come out in manufacturing. And when I looked at them, I thought it was a misprint. It's the first time you really had stellar numbers. Was that a one-off? Is there something happening we don't realize is out there? I don't know. So we have an economy that's typical summer. And that's what I want to call it. The service industry will stay strong as people go out to dine, they're going to fly, they're going to do whatever they're going to do. Industry will be, we hope, getting its feet under it. And we have a runaway in the AI market in America. But remember, that's a select group of stocks. Don't think that everything is AI. You will get burned playing that type of game.
Interesting you say what Americans are doing out there at the moment. Going to fly, perhaps? What did you make of that American Airlines result then, when it's cut its second quarter profit forecast on that weaker pricing power?
Well, other than them and Spirit, the airlines are doing well. I mean, if you go on Spirit Airlines, it's like, how do they get into your pocket every which way? You bring a bag on, extra fee. You want to get some water, an extra fee. I'm not making all this up. It's pretty crazy. And American made a change in its business model. So it's feeling that, and it turned somewhat away, as I understand it, from the corporate side and was going more to the public side of things. I know that their credit card doesn't do well. I happen to fly United Airlines in America, and I know that they're humming. Try to get a ticket, it's booked. I use my card everywhere. I get the points. I love it. And I used to fly American, but I don't find it as convenient for me. So I'm not surprised. Do I think it's a big change? No. And that brings me to Boeing. You know, with all the troubles Boeing is having, I told my subscribers to my research that it's time we look at Boeing. Not yet to buy, but we should be paying attention. We may be looking at a bottom. Eventually, all the bad news ends. And at the end of the day, there's two airline manufacturers. You got Airbus and you got Boeing for all purposes. You don't want to forget Boeing. They will get through this, and the back orders will start getting in there. Their orders will pick up, and this will get behind them. I've seen this with Caterpillar. I've seen it with other companies like this, even auto manufacturers. Boeing's not going bankrupt. They have to have the government look over their shoulder. They've had a bad series of not paying attention. That too will pass.
So, Ira, what's your strategy at the moment, particularly as you say that seasonality may be at play with the sell in May and go away?
I think that you want to be careful about buying now any of the stock indices. I think that you have to see that the market can go up and over the recent highs. Otherwise, pay attention to the sell may go away and use it more of a trading vehicle than an investment vehicle. Second thing, use this break, in my opinion, to be looking hard at the gold market and the copper market to start accumulating positions. I think you'd probably be better off doing so in GLD and COPX than using the futures where the leverage is a little too big. I'd stay away from oil in the near term. It's too much flux in it. We're not getting the typical rallies. A lot of problems in the Red Sea that gives it a bid. There's no way I see that OPEC is going to do on this Sunday and say they're going to release more oil to put the market down too hard. On the other hand, if economies are faltering, and if that's why the stock market here and maybe elsewhere falters, what's that say about oil? It's a tricky time to be in the oil market. So I'd be very, very careful about the oil market. So those are the ways that I'm looking at the market. I have clients in NVIDIA off my research, and they've been in it since we went in fairly heavy in December. And I've been taking the position down 5% here, 10% there. And the reason is, nothing grows to the sky. I realize all the stories, but nothing goes to the sky, and I know I'm not bearish. I always want to own, as a analyst for traders, tell them, own the best. Own an Uber, don't own a Lyft. Own a Walmart, don't own the other, a Target. It goes on and on the same way, and that's the way to go with it. And pay attention to utilities. If AI is for real, utilities in America, they're going to be not only a safe haven, they'll be a place of growth because of the demands that are coming on from each new facility that wants to put together one of these AI, if you will, server plants.
Ira, great to get your view. As always, thanks for joining us from Linn Associates.
Thanks for having me.
Let's just check where we're likely to get going. Given what we saw on global markets overnight, not surprisingly perhaps, we're likely to follow with SPY futures down almost 0.7%. Stay with us because the open is just a couple of minutes away.